Morning. We will call to order the Sunday morning meeting of the Property and Casualty Insurance Committee. Straight to. Okay. I need a, first thing I'll need this morning is a motion to waive the quorum.
So moved. Second.
We have a motion and a second. All in favor?
Aye.
Aye.
Also need a motion now to adopt the minutes of the December meeting
Second.
So moved. Yep. Second.
and the February 19, 2021.
So
committee
moved.
meeting. So I have a motion and a second for that as well. All in favor?
Aye. Aye.
Motion passes. Will has a very lengthy committee scheduled for us this morning, so we want to try to jump right into it. The first item on the agenda this morning will be consideration of the NCOIL Distracted Driving Model Act. We've had a lot of hard work on the model so far. We've been discussing it for several months. We do plan to take a vote on the model today. So I want to get right into it and turn it over to the sponsors of the model, Senator Hackett and Assemblyman Cooley, for some brief remarks. And Senator Hackett, will come to you first. Please proceed.
Thank you, Mr. Chairman, and thank everyone for joining us today. And I promise not to take too much time. I just want to say a few words before we begin and note the changes that myself and my colleague and co-sponsor of the model, Assemblyman Cooley, have made to the model since we have met last in December in Tampa. The model is in the legislative binders on page 353, and the changes made the model on page 358 in the form of new section 6 titled Enforcement and Reporting. That language was included in direct response to some concerns that were raised during the December meeting about the potential negative impact that distracted driving laws that allow for primary enforcement could have on minorities. The new language is taken from the existing Florida distracted driving statute and requires the enforcement officer, when issuing a citation for a violation of the act, to record the race and ethnicity of the violator. That information must then be compiled and reported annually to the governor, the president of the Senate, and the Speaker of the House. We also include new language relating to unauthorized searches and seizures of a driver's mobile communications device. Mr. Chairman, that's all I have, and I think these are very good changes and will strengthen the model, and I look forward to a positive vote on the model. And now I'll turn it over to my fellow sponsor, Assemblyman Cooley, and he's on virtual.
Yep. Senator, before we go to Assemblyman Cooley, Will reminded me we do need to take attendance of the legislators who are joining us remotely. So if legislators on the Zoom, if you would chime in and let us know you're here.
Kevin Cahill,
New York.
Kevin Cahill in New York.
Ken Cooley in California. Good morning.
Joe Fisher, Kentucky.
Jim Gooch, Kentucky.
Paul Epke, Minnesota.
Edmund Jordan, Louisiana.
Lana Tice, Michigan.
Anyone else on Zoom?
John Vita, North Dakota.
All right, thank you. We'll proceed now with remarks from the co-sponsor, Assemblyman Cooley.
Good morning, all. Thank you, Mr. Chairman. Also, thank you, Senator Hackett, for reviewing the changes to the model. I think the changes are important. They do reflect sort of a bipartisan approach, a way to take note of the sensitivity of the topic of documenting how this law is implemented. I think it reflects upon NCOIL as a bipartisan organization, reflecting members from all around the nation. So I feel we have very good amendments that took note of the valid concerns regarding primary enforcement, and the compromise we have here will permit valid enforcement, but also will ensure accountability for how that is attended to. I thank everyone who has worked on the model with the senator from the Buckeye State, and I look forward to shepherding across the finish line today with my colleagues. Thank you very much. I return it to you, Mr. Chair.
Thank you. Do we have any comments, questions, remarks from legislators either in the room or on Zoom this morning? Seeing none, then we will be planning to take a vote this morning, and we can do that by voice vote unless there's opposition to that. If not, all members in favor of adopting the NCOIL Distracted Driving Model Act, say aye.
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 Likewise opposed? And model is adopted. Congratulations to the sponsors.
Thank you very much, Mr. Chair.
Thank you.
Moving on to item number 3, it will be consideration of amendments to the NCOIL Post-Assessment Property and Liability Insurance Guarantee Association Model Act. This one also sponsored by Assemblyman Cooley. So if you want to go ahead and proceed with your comments on this item.
Very good. Thank you, Mr. Chair. This model was actually readopted by this committee during its September meeting last year. But as we prepared for that, the National Conference of Insurance Guarantee Funds brought forward some proposed amendments to the model to make the guarantee fund provisions dovetail better with the proposed model. As revised, it's in your binders on page 359. The first proposed amendment is found on 364, and it adjusts the model to address insurance business that has been restructured under recently enacted laws which permit insurance business transfers or divisions. This amendment aligns with the guarantee fund consumer protections in the insured division model that was adopted by the Financial Services and Multi-Lines Issues Committee yesterday. The second amendment is on page 368 and expressly permits assessments to insurance company guarantee association members to fund various expenses that maintain the guarantee funds in an always ready posture, even when claims activity is low. This is meant to plan in advance for insurance liquidations. Should be noted that the administrative assessment authorities added by this language, combined with any other assessments made to member insurers, cannot exceed the 2% threshold already in place in most states. So we're not blowing through any limits that exist. Overall, these amendments aid and recognize the important role of guarantee funds in protecting consumers against the adverse effects of a company's problems. The amendments also reflect the reality that marketplaces change over time. Adjustment to laws and regulations are necessary. So I thank you, Mr. Chairman, and I will turn it back to you. Look forward to the amendments being adopted today.
Thank you, Assemblyman Cooley. Any members in the room or on Zoom have questions, comments? Representative Lehman.
Thank you, Mr. Chairman. Good morning, Assemblyman Cooley.
Good morning.
You were able to get up at 4:30 a.m. and join us. It's kind of an overarching general question. I know when we had this conversation before about tightening some of this, have we ever gotten the report on what the status of the guarantee funds are from the jurisdictions that have these? I mean, it seems to me that we're talking about making sure they stay whole, and then we put some parameters around this. But I'm just curious, have we seen any ticks up or down on those guarantee funds based on the coronavirus, or have there been other issues, or just what's kind of the overall status of the guarantee funds by state? Do we get a report of that at all?
I think we could readily get one. I think that would be an outstanding program item to bring. You've got the National Conference of Insurance Guarantee Funds. They are sort of the crossroads for all of that type of information. In particular, I know that when they meet, they are looking at national trends, whether COVID related or any other matter. So I don't know when last we had a program overview from the NCIGF, but I'm actually sure they'd be delighted to provide background. And I think that would be good for us. My view is basically the first line of consumer protection in insurance are the rating laws to keep companies solvent so they can pay claims and meet the expectancy of the consumer. But then the second line of defense is actually these guarantee funds, which are sort of honestly esoteric. They spend a lot of time making sure there are no gaps in coverage. So I think they'd be delighted to put together a little update on their work and recent trends of note I see we are joined by Barbara Cox, who is legal counsel with them. Perhaps you'd care to make a comment.
Absolutely. Again, I'm Barbara Cox. I'm representing the National Conference of Insurance Guarantee Funds. We would be happy to deliver a presentation to NCOIL. I can certainly work with Will and NCOIL staff to make sure that we're covering the topics that you're most interested in, whether it be levels of protection, status of laws, assessment history, insolvency history, et cetera. But any kind of information you would like on that, we'd be happy to make a presentation.
And if I may add to that, we've been having discussions about captives and things like that. And a lot of times those don't fall within the guarantee fund because they're not regulated by departments of insurance, et cetera. So as we kind of move in that direction as well, would we be able to see, would you be able to have data that say how many, whether they be trusts or self-insured pools and things like that are operating in states, and then because they would be outside the guarantee fund, and that be a concern as well.
NCIGF, if that question is directed to us, we don't collect information on those entities and self-insured funds, et cetera. We could probably do some research and put something together. I'm not sure that we're the best organization to speak to those issues. I will say that, and this is off the top of my head, in all but I believe one state, guarantee fund protection is specifically excluded from the captive laws.
All right, thank you.
I will work with staff on figuring something out on that, Mr. President. Excellent question.
Any other members seeking recognition or have a question, comment? If not, I would entertain a motion to adopt the Model Act. Senator Hackett, in a second. I have a motion and a second. All those in favor signify by saying aye.
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 All those opposed? And the amendments to the model passes. Congratulations again to the sponsor.
Thank you very much, Mr. Chairman.
Item number 4 on the agenda is the introduction of the NCOIL Fairness and Responsible Drivers Model Act. We had some discussion on this back in December down in Tampa. Since that time, Senator Sean Vita of North Dakota has stepped forward with a model act on the issue, and he would like to sponsor it. So Senator Vita, the floor is yours at this time.
Thank you, Mr. Chairman. I won't take up too much of your time. Proud to sponsor this model, and I look forward to receiving feedback on it from the interested parties. The model is in your binders on page 379 and is very straightforward. In 2014, NCOIL adopted a resolution in support of no pay, no play laws. This model can be viewed as the next step in support of those laws in the form of a model law. I note that the model is titled Fairness for Responsible Drivers because I think that this is a better way to frame this issue. It may seem like semantics, but at the end of the day, this issue is centered around fairness. The model and the laws in approximately 10 states that have similar laws, including my home state of North Dakota, prohibits uninsured drivers from collecting the benefits of a system from which they don't participate in. Specifically, the model prohibits a person or a personal representative of a person who is an uninsured motorist who sustained bodily injury or property damage as a result of a motor vehicle accident from recovering non-economic damages from the person's bodily injury or property damage or death. It's important to note that such prohibition does not apply to economic damages, and there are exceptions as set forth in Section 5. Also, the prohibition does not apply to an uninsured motorist who at the time of the automobile accident has failed to maintain coverage for a period of 45 days or less, and who had maintained continuous coverage for at least 1 year immediately prior to such failure to maintain coverage. That's everything, Mr. Chairman, and I look forward to working with everyone on this model.
Thanks, Senator. Any comments from legislators, either in the room or on Zoom?
California has a similar law that was adopted by the voters, I think, in the 90s. So it was certainly seen as fairness when it was presented to our voters, and they went up on it.
Senator Raper?
Thank you, Mr. Chairman. I just wondered if the senator could tell us how many states have adopted. Do we happen to know how many states actually have something like this adopted already? He mentioned North Dakota.
Yeah, Mr. Chairman, there's approximately about 10 states that have the similar legislation such as this.
Very good. Thank you.
Anyone else seeking recognition? Representative Gooch?
Hey, Mr. Chairman, I just had a question just for clarification. We were talking about non-economic damages. Certainly you have maybe the driver and owner of the vehicle who may not be insured, and I understand that we could exclude that. But you may also have someone who's passengers in the vehicle or whatever who may have their own vehicle that's not insured. Is there a distinction there? That's just my question.
Yeah, Mr. Chairman, I would assume that, and I hate to assume anything and comes to insurance, of course, but I would imagine that those individuals that are in the vehicle would be held harmless, I would think, and would have some sort of recovery from the driver at fault. That's I guess kind of where I'm at on that right now. I can't get any deeper in the weeds than that.
We do have a couple other speakers on this topic. Kenneth Klein with California Western School of Law. If you're on Zoom with us.
Yes, sir, I am.
You may proceed.
Thank you. I appreciate that. And I'm going to try to share my screen here. Hopefully that's going to work well. I'm assuming everybody can see where I am at this point. First, let me just say that I appreciate this opportunity to speak to NCOIL. It's made me think deeply about an issue that I think is interesting. I will give you the big headline before I start, just so there's no surprises. I grew up in the great state of Texas, where one of my favorite country western songs said that the road to hell is paved with good intentions. And I think that that may be a preview of where I come out here. I will say that I'm in San Diego, so I'm glad that the sun is at least starting to come up out here now. It's a bit early. So this is me. This is my background. As you can see, I spent most of my working life actually defending companies in business litigation. Basically what my varied background has taught me is that I should test intuition with data, because as I've become older, I've concluded that most things that seem intuitively true to me turn out to be unsupported by data. So I want to turn to the data on this proposal model act, but I want to start with the big picture, which is to note that the title has changed from no pay, no play to the fairness for responsible drivers. And I take it the point being made is that primarily this is about uninsured motorists making insurance too expensive for the rest of us. That's what's being trying to be conveyed. So this is now framed as a proposal to reduce the cost of insurance by decreasing the percentage of uninsured motorists by passing a law that penalizes uninsured motorists should they be in an accident. By the way, as to the prior question, as currently framed, the act is talking about an uninsured motorist. And that probably does mean that it doesn't act to exclude recovery by a passenger. And intuitively, of course, this seems like a perfectly good idea. But there's the other side of this question, which is depending on whether your state is a comparative negligence state or a contributory negligence state, as a general matter, you cannot recover any form of damages as a driver unless you are not at fault or someone else is more at fault. And you don't pay any damages unless you are at fault. So the structure of this law is to create a penalty to an innocent or relatively innocent driver and to give relief to a driver who is actually at fault, a windfall to them. And so if you think about it that way, that is intuitively troublesome. So I have tried to go to the data and see where it breaks on these two conflicting intuitions. So starting point is, of course, to look at the goals of the proposal, which are set out in NCOIL's 2014 resolution. Starting all of this, it calls out 3 goals: to increase the percentage of folks who have insurance, lower insurance premiums, and reduce fraud. I will note, by the way, that except as expressions of fairness, fairness isn't on that list. Now, here is what the data tells me on these things. So, and we'll get into the details of this a tiny bit after this slide, which is you're going to reduce the percentage of uninsured motorists if you pass an act like this, but only by a trivial amount. Your premiums are going to lower, but again, by only a very trivial amount. You're probably not going to touch fraud at all. And all of this will be at some fairness costs, which are largely innocent drivers will actually not get full recompense of their actual damages. There'll be windfalls to at-fault drivers, and you're facing a very real likelihood of disparate impact by race. So let's go through that very quickly. So twice the Insurance Research Council in the recent years has looked at these issues and provided us a good database, once in 2012 and the second time in what is styled a 2020 report, but actually came out last month. The smaller bullet point here is me just showing my work as somebody who grew up in a mathematics tradition, and the tiny little text at the bottom is simply confirming for you that I contacted the people at IRC, and they have confirmed that I am reading their reports accurately as I derive these numbers. And the bottom line is, what is the percentage of reduction in uninsured motorist rates that you should expect from this model act? You should see a reduction of 0.2%. Now that still could work out to be big numbers. And so you might be asking yourself, yeah, but what about dollars and cents? Well, again, the smaller bullet points are showing my work, but this is what you're going to get. If adopted, this proposal will result in an average premium reduction for auto insurance per car per year of 16 cents. 16 cents. Okay. So what about fraud? Well, fraud's a real concern, right? I mean, NCOIL is a member of the Coalition Against Insurance Fraud, and I asked their executive director, Matt Smith, a friend of mine, as I was getting ready for today, about fraud. And, you know, he raised that there's always a concern, as there is, of staged accidents and medical fraud rings and vehicle jump-ins. But he also confirmed for me what I believed to be the case, which is there's actually no data at all to support that a law such as this will reduce fraud. And why is that? And that's because this act is assuming that there are fraudulent claims, either accidents that didn't happen or non-economic damages that didn't happen, but they aren't getting sniffed out by insurance professionals or by litigation issues, that they're getting paid. And I'm sure that happens, but I'm sure there are also legitimately uninsured motorists who get hurt, who have true pain and suffering and other non-economic damages. And this is a baby with a bathwater problem. You can't quantify, there is no data to quantify how much this is one and how much of this is the other. But if you adopt this act, what you end up doing is you end up actually trying to disincentivize fraudulent actors by punishing non-fraudulent actors. And that at least should give you some pause. So now let's turn to the newly titled concern of fairness, right? Because fairness is really the core of what is underlying this question. Next speaker is going to be Mr. Kirkner, who just a few months ago described in your last NCOIL meeting fairness this way. Individuals who do not participate in the system should not be able to inure the benefits of that same system, okay? But if you press on that, it's mixing apples and oranges, because this proposal doesn't block an uninsured motorist from recovering any damages. It simply blocks them from a class of damages, non-economic damages. Now, back when I played some cards in college, we would call this a little bit of a tell, because the concern here really is with a category of damages, not a category of victims. And if your concern is with and so it's just mixing two things, right? You're blocking an uninsured motorist from a category of damages. You're not blocking uninsured motorists from any recovery. So you're just mixing two things. Now, again, I understand the concern, but there are real fairness costs here. And here's what they are. You, as I've alluded to, you will have some degree of punishing innocent victims. Second, you will have some reward for the guilty. Third, you're actually creating a moral hazard problem, which in the world of insurance is, not a trivial little phrase. Because if you, as the IRC says, will relieve at-fault drivers from having to compensate uninsured drivers, that's a little moral hazard incentive for at-fault drivers to drive a little more recklessly. Now, I'm not personally a big fan of moral hazard. I don't think the theory holds, but it either holds or it doesn't. And if you think moral hazard is a real thing, that's how it plays out here. But most importantly, this does play out probably disparately by race. And that ties into a great deal of information you heard among other times just this past Thursday. And so there's that it's not race neutral. So look, here's the bottom line. For a 16-cent reduction in premiums and a 0.2% increase in the percentage of insureds, you're going to give some degree of windfalls to at-fault drivers. Largely innocent drivers are going to be punished, and some likelihood of disproportionate harm falling on minority communities. Now, I welcome any questions. I can see some of you shaking your heads thinking I'm all wet. I'm sure Mr. Kirkner is going to say the same thing, so I'm interested in hearing those comments. But I'm simply here to tell you, this is what the numbers are. 16 cents, that's what the numbers are.
Thank you. Andrew Kirkner, if you're on and would like to make comments, we'll turn it over to you.
Good morning, Mr. Chairman. Andrew Kirkner on behalf of the National Association of Mutual Insurance Companies. I'm here today in support of NCOIL's efforts to address affordability and fairness in automobile insurance via the Fairness for Responsible Driving model before the committee. At the risk of giving Mr. Klein more ammunition for our next meeting, I'll try to keep my my poker face here for the next few minutes. As mentioned when I testified before the committee in Tampa, our support for this model or the concept of the model, I should say, comes from a simple maxim, and that is that illegally uninsured drivers should not receive a windfall as a result of their unwillingness to participate in a system of pooled risk. The model before the committee largely accomplishes this goal by prohibiting the collection of non-economic damages for illegally uninsured drivers. In addition, and Mr. Klein provided an overview of these along with the sponsor, the model also provides safeguards even for those same illegally uninsured drivers where they are injured through another party's bad act, for lack of a better description, whether that be DUI, fleeing from the police, or intentional conduct. So there are exceptions for those scenarios. I guess I would just briefly respond, and I don't want to take up too much of the committee's time here on a Sunday morning. I would just say a couple of things. One, I'll start by agreeing with Mr. Klein, which may surprise you. He said very clearly in his testimony that this bill will lower costs and it will decrease the amount of uninsured motorists. I think whether that's 16 cents or $16 or $1,600, this group knows very well that there are a number of upward pressures on premiums, that there are a number of reasons for uninsured motorists populations. And what we should be doing, I think, in everything we look at is trying to decrease those numbers. What the Nevada study from 2012 that I outlined during our last meeting tells us is that there will be some drop in these two metrics. I think anything we can do to put downward pressure on premiums, to put downward pressure on the uninsured motorist population is a good thing. And the other quick point I'd like to address is that Mr. Klein indicated that it would be intuitively troublesome to punish not at fault drivers. This is not about assigning fault. This is about insurance as a pooled risk system. We pay into a system. That system pays us out when we have a covered accident. That is about as fair as it can get. And folks that decide not to participate in that system should not be paid out. Finally, and in closing, Mr. Chairman, I would simply say that Mr. Klein, I think, went into great detail about how we should use data to support our assumptions. He then concluded his testimony by saying that this probably has a disparate impact. I think that's irresponsible. I think we need to look at this bill with the data that's in place, and absent some showing, that's not the case. This bill will, in fact, align the concepts of fairness for those drivers who decide to participate in the pooled risk system. So I'm happy to try to answer any questions. I really appreciate the opportunity to be before the committee this morning.
Thanks, Andrew. We do have a comment or a question from Representative Lehman.
Thank you, Mr. Chair. This question is for Professor Klein. In your presentation, Professor, one word jumped out at me a couple times. You used it, and that was the term "the innocent driver." And so I guess I want to focus on that word "innocent" because I look at this, and these are all people who you could make the argument are violating the law, because every state has a financial responsibility law. And so if I'm choosing to drive with no insurance, am I not choosing to violate the law? And so if I'm choosing to violate the law, then I'm not really, in my opinion, an innocent victim. How do I marry those two terms of an innocent victim, yet someone who is purposely violating the law? Because everybody knows insurance is required by law, because the minute they get caught, they admit, I should have known to have insurance. I just don't want to, pay the premium, or don't have the money to. So those are issues there. But help me bridge that gap between innocent and law violators.
Yes, sir. And I appreciate your question. And of course, it is the time constraints that are prohibitive of us getting into nuance. Of course, no one is wholly innocent, right? So for example, in this situation, we're talking about two actors who are not wholly innocent. One is the person who doesn't have insurance. The other who is the one who has violated the laws by driving in such a way, typically negligently, that has caused someone an accident, because you have to have a lack of innocence on both sides of this equation for this model law to be triggered. And what I would say to you is this: you have passed as legislators laws in each of your jurisdictions saying that people must have insurance, and therefore all uninsured motorists have violated those laws. Of course they have. And you have set penalties for that. And that's fine. Now what you're doing is changing the penalties by taking away a class of damages. You're not saying that they can't recover damages because they're not paying, right? This is Mr. Kirchner's point. You don't pay, you shouldn't play, right? But you're letting them play. As to some damages, you're not letting them play as to another set of damages. And so my question is, what's the basis for that distinction? What's the basis for saying you can recover for these damages, but not for these others? Okay, and so you're not simply saying you're barred from the system. Okay, what's happening is you're focusing on non-economic damages because you suspect that those aren't real damages. And the reality is some of them aren't, but some of them are.
Well, and I think we put in exceptions for those things of which we, the person driving, have violated the law. But my question is also negligence. I don't think negligence is a statutory violation. If I slide on the ice and hit you, I'm negligent. if I'm going 100 miles an hour and I'm intoxicated, now I'm violating the law as well as being negligent. And we carve those out in those exceptions of if I'm truly a lawbreaker on my side, then you can still get those damages. But if I'm just negligent, slid on the ice, whatever it might be, that I didn't break a law, I just simply was negligent, then you would not be entitled to those. So I'm still in that area of innocence.
Sure.
And we can have this discussion longer.
Yeah. And let me just take 10 seconds to say that I teach law school. That's my job now. And in a law school professor's view of the world, whether a law comes from court decisions or from a statute, it's still a law. In other words, that's not a distinction as to whether one's breaking the law, whether the source of that law is a series of court decisions or whether it's a statute.
May I jump in for a moment, Mr. Chair? Ken Cooley?
Sure, please proceed.
I think this is a good discussion. I would grant that you cannot talk about insurance and its impact upon rates without really, it's a multivariate conversation. There's lots of things that go on. With respect to no pay, no play, it is an interesting one in as much as in California, the voters adopted this policy in 1996. And the interesting factor to that, in the 1980s, California saw average auto insurance rates increase over that decade by 150%. Very, very dramatic increases in rates across a decade. By the time we got into the 90s, it started to fall. And after 1996, there were significant impacts in terms of the volume of uninsured motorist claims, bodily injury claims, and auto insurance rates. So I just want to say, I do understand there is reality to Professor Klein acknowledging that it's hard to pin down the exact cost associated with improvement. But when you stand back and look at what happened to auto insurance rates in California over the course of the 80s and the 90s, and specifically looking at what happened after the voters approved this doctrine in 1996, you do see rates falling, and that's quite striking. So I just feel there is an aspect of you sort of just, what do you find compelling? Ensuring that people who are in the marketplace play by the same rules does support our system. And this rule is designed to reinforce that. And there is definitely a record of declining auto insurance rates and many other factors associated with the period of the 1990s in California.
Mr. Chair, if I might comment.
Yes, sir. Please proceed.
Well, and so this is Edmund Jordan in Louisiana, and we passed a no pay, no play law in 96 as well. And I think there's a difference between correlation and causations, because I can tell you we still have the second highest rates in the country right now. And so we have seen no reduction because of that. Now, I will say our law is a little bit different. We initially excluded the first 10,000 of damages, and now it's the first 15,000 of damages. But, you know, I heard Mr. Kirkner say this is not about fault. This is about risk pool. I totally disagree with that. I mean, our tort system is based on fault. So when you're talking about relieving an at-fault driver, the uninsured motorist may not be an innocent in guilt to me. I mean, that applies to the criminal code, but we're talking about civil law. So we're talking about whether they're at fault or if they're not at fault. So now you're taking someone who is not at fault and punishing them for the acts of someone who is at fault. And so while, you know, maybe there should be some penalty, I think our provision is probably a little bit fairer when we say we're going to take a certain amount off the top, that you're going to get a reduction in what you can recover, but to say no recovery at all, I don't think that's fair. And that, to me, that's totally unfair. And I think if we look at some of the things that Doug Heller and some of the other people spoke about, I think there are other ways to reduce insurance rather than this. I mean, if we're talking about doing this for 16 cents, then is it really worth it? But again, my bigger point is, and we're here in a comparative fault state, somebody who is at fault should not get a free pass. To me, that's not fair at all. And I do agree with some of the things that the professor talked about as it relates to race and insurance and some of the cost. And then we get to the point of why people are uninsured. I think we have more at play than meets the eye here. So for me, I disagree with the title. I somewhat disagree with the premise, and I'm not sure exactly what we're trying to accomplish.
Thank you. We do have a couple of members waiting to be recognized on Zoom. Kevin Cahill.
Thank you, sir. First of all, I'd like to respectfully disagree with my friend Ken. I don't believe the professor said that the economic impact was not easy to determine. He specifically said that the economic impact was the savings of 16 cents on an average premium. He also said that the impact on the number of uninsured motorists was negligible, and it is truly negligible. That is a rounding error. 0.2% is a rounding error. And there's no real way of telling whether that would actually be the impact of it. But I would like to ask the two panelists who spoke about innocent parties here, because innocent parties are not always the people who are in the accident. Sometimes they're the people who are the families of the people who are in the accident. And how would this impact the rights of the families to enter into, to seek recovery from the negligent driver in an accident that perhaps cost the life of the uninsured motorist? I'll just leave that out there if either one of you want to answer it. I might have a couple of more, so go right ahead.
Thank you for your comments. It's almost like you're in the room with us. Nice background. Next, we have Representative Brenda Carter. Comments or questions?
Hold on a second. I was hoping to get an answer from the two panelists on my question.
Sure, I'm happy to take a stab at it, Andrew, unless you want to go first.
Go right ahead, Professor. I'll follow up.
Thank you, sir. So it's, that's a tricky question. A lot of it turns on how much you read into the word motorist in the statute, because the statute seems to only apply to the driver who was uninsured by the use of the word motorist. I take it that's the case. But the kinds of damages you're discussing are often what we call a derivative or dependent. In other words, the family's damages are dependent on the ability of the primary of the driver, the primary injured, to recover. And so to the extent that your tort system in your state has a structure of recovery law that makes the family members' harms flow from the ability of the primary driver to recover, the moment you block the primary driver, you block everybody else. And of course, the winner in that equation is the at-fault driver, who doesn't have to pay for the damages they caused, however large they are, and their insurance company, who doesn't have to pay for the damages that were caused by their insured.
I think, stated another way, and I don't disagree with anything the professor just said, except for the part or the focus, I should say, on at fault and not at fault drivers. Again, it seems to me that the professor is completely discarding the fact that the scenario is a person has refused to pay into a system that is designed to cover their losses for covered claims. The other thing, just very briefly, I'd like to touch on, I think Representative Jordan mentioned that this bill bars recovery, and that's not true. As the professor said, I think at length, this bill does not bar recovery. What it bars is the recovery of non-economic damages. That is, I don't want to get too cute here. If the professor thinks that should go farther, there may be some level of agreement there. But I think what the intent there is to strike some balance between damages that don't necessarily that would make someone continue to live their life without having non-economic damages, the windfall aspect of this from a system that they don't pay into. Again, this is a system that you pay into, to inure the benefits. And this is a scenario where these folks have not paid into that system.
But again, sir, my question was about the families of accident victims. Can you answer that question?
Well, I think the professor did. I mean, I think it depends on the tort system in a given state, but the maximum would remain the same if the individual has not paid into the system. Those benefits outside of the non-economic benefits, I should say, would not be accessible.
Thank you very much. Thank you, Mr. Chairman.
Representative Carter.
Thank you, Mr. Chair. I have two questions here. The first to Professor Klein. You mentioned that disparate impact would definitely affect races. But what about those who are impoverished? We are going through a pandemic where many people have lost their jobs and they've lost their inability to just feed themselves, let alone afford auto insurance. And to Mr. Kirkner, you mentioned in your comments those who intentionally decide to circumvent the system. I agree with that 100%. But what about those who cannot afford to participate in the system? Would this legislation be punitive to people who are for economic reasons, not racial reasons, but economic reasons, unable to participate even if they want to? This seems to be punitive for those who cannot afford to participate in the system. Not choose to, but cannot afford to. I'd like an answer from both if possible. Thank you.
Andrew, you want to go
Sure.
first
I'm
on this
happy
one?
to. Sure. Yeah. Representative, thank you for the question. And I think it's a really good one. I think it's the catch-22 of what we try to do when we talk about insurance laws, right? Part of the impetus for efforts like this is to lower insurance costs, right? To drive costs down. I think I would push back a little bit at the earlier comments saying that the reduction in uninsured motorist population is a rounding error. I don't think it is a rounding error. And depending on the population of your state, it could be a very substantial number, even if we accept Professor Klein's numbers at face value, which I don't have a reason to dispute here today. And then you start talking about the corollary benefits that come with reducing the uninsured motorist population, the potential for some real positives here. I think, though, to your question about folks who are not making a decision, but rather circumstances have placed in a position where they cannot participate, I think the states have remedies there, right? So whether we're talking about residual markets, whether we're talking about state-run low-cost auto insurance programs, there are remedies available to the states, even if you went so far as to subsidize insurance in some way for those who can't afford it. There are remedies available to the state. I think those remedies would exist in a world where the Fairness for Responsible Drivers Act were passed or were it not passed. I mean, I think I guess the moral of the story is those questions exist regardless of this bill passing in a given state or not passing.
I'm really glad you asked this question because there's an underlying assumption in this whole conversation, which is that most people who are uninsured have the money to do it, and they're just choosing not to pay. Okay. And look, I have very little sympathy for such people. I truly do. But I suspect, I don't have data supported, but I suspect that most people who don't have auto insurance, or at least a significant chunk of them, are because they can't afford it. Because remember, the base level of uninsured motorist of auto insurance is not to insure me for my harm. What I'm required to do is to insure for harm I cause, right? And what this is doing, this proposed law, is it's not strict, it's saying I didn't cause harm, but I, in other words, the insurance I'm supposed to be getting, I didn't get, but that's not the accident that happened. Okay. I didn't cause harm, but I'm still going to suffer a penalty. And it's just, frankly, You know, I suspect every single person in this room and on this call can afford auto insurance and has it. And we have a deep lack of appreciation and empathy for what most of this country actually looks like and how close to the edge most of us are living. I hope the pandemic has taught us a little something about that, as to just how on the edge most of this country is. And those are people who are going to actually be hurt by this law.
Thank you. Any other legislators in the room or on Zoom seeking recognition? Anybody will? Okay. All right. If not,
This is Assemblymember Hunter. I have my hand raised.
okay, please proceed.
Yes, I'd just like to just make a comment, not a question, but after listening to this presentation and knowing we spent several hours on Friday talking about disparate impact, I would like to, offer that the models that we present are purposeful and looking forward to ensuring that we're not, on one hand, working towards policies that are not discriminatory, and then putting forth models in some ways that may impact, as our last speaker had made reference to, whether it's minorities, people of color, impoverished communities. I think that we always need to be taking a look at the steps further, not just the language in the model, but the impacts on the communities that this can affect. Obviously, I have a very diverse population of folks that I represent, from the very wealthy to the Native Americans and very, very poor. And I believe Mr. Klein's comments, speaks to that in the state of our current situation in the pandemic. So I just want to offer that if we were to vote on this today, I would not be in support of this, but going forward, models that we present, I definitely think need to take a look at some of the impacts that obviously we are spending hours talking about in NCOIL. Thank you very much.
Thank you. We're not taking a vote on this today. I think this is a topic that's going to create considerable conversation at future meetings. So if there's no other legislators seeking recognition on this topic, we will go ahead and move on to item number 5 on the agenda, which is consideration of amendments to the NCOIL Peer-to-Peer Car Sharing Program Model Act. In December 2019, NCOIL adopted the Peer-to-Peer Car Sharing Program Model Act, which I was proud to sponsor. The model's been successful and been introduced and adopted in several states across the country. Since that time, some amendments to the model have been agreed upon by both the insurers and the peer-to-peer car sharing companies. And I'm sponsoring those amendments today, which you can find in your binders on page 382. Overall, the amendments aim to provide clarity, standardization of insurance coverage during the peer-to-peer car sharing transaction, and deal with amending certain definitions in the model, clarifying state insurance limits, primary liability, and underwriting issues, and providing additional record-keeping requirements on the car sharing program. Andrew Kirkner of NAMIC would like to say a few words regarding those amendments. Andrew, I'll turn it over to you.
Thank you, Mr. Chairman. I'll be very brief. As the chair just outlined, the amendments to the Peer-to-Peer Model Act came as a result of negotiations between insurers, between the peer-to-peer programs, and also other stakeholders over a number of months. We think that the amendments make a lot of sense at the state level. We had the opportunity to go into states and have these discussions and see what worked and what didn't work. And I think these amendments, specifically relating to language around underwriting freedom, definitional tweaks, and more clearly defining the lines of liability where a termination time is in dispute, really help clarify the insurance coverage in place. And so I just want to thank you, Mr. Chairman, for your work on this, and NCOIL more broadly. We are supportive, and we hope the committee will pass the amendments. Thank you.
Thank you. We also have Brad Nall, I think, representing Enterprise.
Yes, thank you, Mr. Chairman.
Sir.
Brad Nail representing Enterprise Holdings, Enterprise Rent-A-Car, Alamo Rent-A-Car, and National Car Rental. We're fine with these changes. We'll support these amendments. I really just want to take this opportunity as a reminder to the members here that this model is limited in scope to the insurance provisions of any bill that you might see in your state. And if you look in the model itself, Chapter 2 addresses that scope issue and spells that out. In the case of this particular issue, the insurance provisions are relatively non-controversial in the broader scope of this issue. You should also expect to see and to hear language addressing equitable taxation of these transactions, airport issues, consumer protection issues, and we're working hard to find compromise language on all those issues as well. But that's a discussion that's continuing. So we support the NCOIL language. We expect all the parties involved in this to promote the NCOIL language within your state, but the debate's not going to be limited to that language. That's it, Mr. Chairman.
Thank you. Any other member seeking recognition on the amendments?
I just have a question, Mr. Chairman.
Yes, sir. Senator.
Have we now, again, I was trying to think, I was asking Will, but go ahead and ask it to you. We originally the transportation sharing model. I think, is this now replaced it in some total, or we still have these separate models? Because it's
They're
a little
separate.
bit different. Okay.
Yeah, they're
all
separate
right.
models. We have the TNC and this is the peer-to-peer.
Okay. Okay. I wondered if we were beginning to merge any of that. That's what I was asking. Thank you.
Yeah.
Delegate Westfall.
Yes, thank you, Chairman. I'm pleased to support your amendments here. I think it makes the bill a lot better. In 2020, we passed peer-to-peer car share in West Virginia, and most of these amendments you're offering are in our bill in West Virginia. There's some other things that are not, but it's making it a lot better, this model access. And so really pleased to see what you're doing this. Thank you.
Thank you. We're looking forward to doing it in Kentucky in 2022, finally, I hope. Any other comments, questions? If not, I would entertain a motion to adopt the amendments as presented.
I move we adopt the amendments as presented.
Motion, I need a second. Have a second. All those in favor signify by saying aye.
Aye.
All those opposed? And the amendments are adopted. Thank you all. And then finally, the last item on our agenda this morning is a presentation on community-based catastrophe insurance, a model for closing the disaster protection gap. And we have a couple of presenters from Marsh Mack and Guy Carpenter this morning, Daniel Kanuski and Andy Reed. If you guys are on here and ready to proceed, I'll let you take it from here.
Thank you, Mr. Chairman, and thank you to the committee. We appreciate the opportunity to address all of you today. And honestly, it seems like just yesterday that I was addressing you in a different capacity. Some of you may recall I was the deputy administrator of FEMA until about a year ago. And back when I was at FEMA, when I addressed the committee, I said that we were looking to the insurance industry for innovation. And I hope what you'll see today is an example of that kind of innovation in the industry. And it's largely due to experts like my former FEMA colleague and now Marsh Mack colleague, Andy Reed, who's a Guy Carpenter, who will be joining me for this presentation. What we're going to talk about today is, yes, community-based catastrophe insurance, or CBCI, and we believe it can help to fill the protection gap. Next slide. So as we all know, the protection gap exists and it's growing. It's growing for two big reasons: reduced funding and rising costs. Reduced funding because of all the challenges that I'm sure you're more aware of than I am, which is funding shortfalls in state and local governments. And on the rising cost side, it's increasing disasters, increasing intensity of disasters, increasing damage from disasters, both of which are making that protection gap grow all the time. The financial impacts of catastrophic events are something that it's hard to overlook. We know that, frankly, from an insurance standpoint, that take-up rates are low, right? We know that homeowners in California have far too little insurance. We know that those in the central part of the US have far too little insurance for a New Madrid type event. And we know the National Flood Insurance Program is struggling to increase its take-up rates. The fact that only 30% of those homeowners in the high-risk areas have flood insurance is a problem. Overall, nationwide, it's in single digits, right? Single digits of homeowners have flood insurance. Now, what can we do? Next slide. Well, we can, again, do something innovative. So what is CBCI? It's insurance arranged by a local government or quasi-government body to cover properties or individuals within that jurisdiction. Simple as that. So to talk about this in a little more detail, my colleague Andy.
Thanks, Stan. Yeah, and just to also elaborate a little bit on what CBCI is, right? When we say community, what do we mean? It could be any special purpose district, neighborhood association. There are varying and flexibility. There's flexibility around which type of entity could actually implement a program like this. If the entity has a financial relationship, either through tax or other means or a regulatory authority, it certainly makes things easier. So there's a broad definition of community here as we're talking through the specifics within. So let's talk about where CBCI fits into the protection gap and some channels by which communities can buy down their protection gaps or increase their resilience. So looking at the waterfall graphic here, the first means by which communities can reduce their risk, of course, is through physical resilience enhancements. So investments in risk reduction or mitigation, right? Or other preparedness investments as well to be better equipped to respond. Moving to the right, the second is through broader risk financing. So enhancing the insurance market, pursuing risk transfer or other financial resilience means to help buy down their economic losses and really shrink that protection gap component, which is the third slot here on the graphic. I would say in many cases, the protection gap is actually quite large. Communities in many instances are facing, as Dan noted, a lack of insurance uptake. And so proportionally, this would probably be bigger for a lot of communities. But we do see opportunity for CBCI to play a role in both physical risk reduction and investments in mitigation, and also obviously in disaster risk financing and enhancing the insurance market. And I'll talk a little bit more about that on the next slide here. So what are the benefits of a community-based catastrophe insurance program? So as I mentioned, naturally, there are incentives for risk reduction built in. When you are investing in disaster risk financing, premium reductions or investments in physical resilience are naturally incentivized. So you can better monetize those mitigation investments through those premium reductions rather than just relying on losses avoided, which we find is kind of an uncertain and longer term return on investment. So this provides a more near term return for communities who are actually investing in disaster risk financing through CBCI. Of course, through the process of developing and implementing a community-based catastrophe insurance program, the community also would receive enhanced risk information and be better equipped to communicate that risk to the community. Additionally, this would help them in prioritizing those mitigation investments, and we believe very strongly catalyzing community scale mitigation projects. Additionally, another benefit of CBCI programs is that they can allow the community to deliver targeted assistance. So there could be affordability programs that could be implemented for low-income, high-risk individuals within the community to help incentivize or support the purchase of insurance, and that can be effectively done through these types of programs. Additionally, a community could help to sustain and maintain the availability of insurance throughout loss volatility. And so somewhere, between a market of last resort and an existing robust insurance market within the community could be in the middle, helping to offer coverage and sustain that coverage throughout losses. And of course, intuitively, more insurance in the community or risk transfer protection at the community level enhances the financial resilience of the community. So it improves their credit risk profile and access to capital. It could also speed up recovery significantly and allow for faster time to economic revitalization after a catastrophic event. So what types of models or how do these CBCI programs get implemented? Well, let's talk about the specific mechanics. So through our research, we outlined 4 broad institutional models by which communities could engage in a community-based catastrophe insurance program. Across these models, they allow for great flexibility for the community to tailor their program to the specific risks that their community is facing. And there's varying degrees of community control, but also varying degrees of community resources and expertise required to implement. So if you look at the graphic here, the 4 models that we've outlined as you move from left to right increase in degree of community control, but also in terms of requirements for expertise and potentially resources to implement. Notably, the 2 partnerships on the left allow for or actually require a partnership with insurance carriers within the community, whereas the 2 models on the right allow the community to more directly engage capacity providers. So let's talk about the specifics of each model. The first, the facilitator model. This is where the community essentially establishes a beneficial arrangement with an insurance carrier or carriers within the community to either enhance distribution, partner in communications and marketing, or to potentially go as far as to incentivize coverage through a tax credit or reimbursement, something of that nature, or potentially even mandate coverage for a section of the community. So there's a lot of flexibility here. This is the least intensive type of arrangement. The community is firmly playing a facilitation role, and the insureds, so the community members, are engaging directly with an insurer for both premium and claims payment. There is a notable example of this type of structure in upstate New York with a community that offered a tax credit to incentivize those in high-risk areas who are low income to purchase flood insurance. So that's kind of a means by which this could be affected at the community level with a reimbursement afterwards. So making incentives to purchase and partnering with an insurer to communicate and help distribute that within the community. So the group policy model, this is kind of think of an employee benefits type structure where the premium is paid into the employer or the community in this instance, and then the community would work with a carrier to essentially acquire a group policy. Claims would then be administered and engaged with directly with the insurance carrier by community members. This allows for a little bit more control, certainly more leverage in terms of negotiating any premium discounts for mitigation investments. So there's a little more control here for the community, perhaps in that dialogue and conversation. They also probably get access to some better risk information at the community level with this type of model that they could use to communicate risk more broadly within the community. So a little more engagement here. There is a notable example of this or pilot project that is pursuing something aligned with this type of model in North Carolina, where the state is looking at potential means by which they could purchase insurance on behalf of low-income individuals who are affected by recent flood disasters to purchase flood insurance on their behalf. They would be listed as informed on the policy, so they would know if the policy is maintained by that individual or canceled or non-renewed. But the insured is the low-income resident who has experienced flood damages, and so they would work directly with the carrier on claims. We certainly see opportunity for private insurance carriers or other private interests to engage in a similar manner with communities in this type of model. So the next model is the aggregator model. This is where a community would buy a bulk parametric policy. So you could think of it as potentially a parametric structure backed assistance program or insurance program or grant program. So the community is engaging likely more directly with capacity providers in this case to acquire an innovative parametric insurance policy in bulk. And this allows for a lot of flexibility for them to target how they would structure the payouts. Again, as I mentioned, they could determine it would be most appropriate to fund an emergency relief grant program, and we're actually working with the community to actually a large metropolitan area to help frame out and design a parametric structure that would allow for them to fund emergency relief grants for low-income individuals after an event. So there is broad flexibility here. Parametric structures are unique. There is what we call basis risk. So the potential for a triggering event to occur and the structure not actually allow for a payout, or vice versa, where a payout is triggered and you haven't experienced a loss event. So these types of things need to be managed, and the community would certainly need to work with some sort of broker in this instance to manage that risk. The payout structure by which any payouts would be made after a disaster certainly needs to be well defined and clearly communicated, so there are clear expectations. And the community could collect the premium through their tax relationship or other financial means of surcharge within the community. And also, I'll just say parametric structures have been implemented globally for these types of mechanisms in other countries and other regions, perhaps most notably nearby with Fondon, Mexico's disaster relief program. They've leveraged parametric structures. We have seen in the US a number of entities pursue parametric type structures. The state of Utah had an earthquake parametric that augmented their property insurance program and paid out after the spring earthquake, the Magna earthquake last year, and helped pay for deductibles and other expenses related to that. And they ended up having coverage for a large portion of the damages therein. The Metro Transit Authority has also leveraged parametric structures to support their protection for their assets in the New York region. So there is kind of precedence for those being applied here. So a community could leverage this to help cover individuals within the community, but they also could bolt on or augment their existing property insurance coverage to cover deductibles or the gaps that there might be with a parametric structure like this. In the last model, the community captive model. So in this instance, the community would establish its own risk-bearing entity and potentially work with a fronting carrier or pursue outright licensure to offer some coverage within the community. We are working with a metropolitan area that has taken innovative approaches to their captive in the past, where they have actually offered a subsidy for nonprofit healthcare providers when malpractice insurance was challenging. And they're looking at expanding their authorities to help cover low-income, at-risk individuals for flood. So many communities, cities do have captive infrastructure already. And so we are pursuing pilots down this line to see how a community could offer coverage. This is certainly the most intensive in terms of resource and expertise commitments at the community level. Would be something that obviously there's capitalization requirements, captive management, but it certainly allows a lot of flexibility for the community to access reinsurance or capital markets capital. So there are benefits to accessing different forms of capacity. But this is certainly the most intensive of the four models, but allows for a greater degree of control over the coverages offered. There is potential for the community to deliver assistance through the captive as well. So that's something else that would be beneficial here. And so now I'll turn it back to Dan to talk through the five-part framework that we have for implementation.
So this is the how slide. How would we do this? How would us collectively or us as a firm go through this effort? And I would say that we should almost think about the end state first, which is the end state is resilience, right? We're trying to have a more resilient community with more resilient community members so that when a disaster happens, there aren't the financial and physical losses. And to do that, you need two things. You need insurance, and obviously where we're very focused today, but also, as Andy mentioned, you need hazard mitigation. And that's really how we see this coming together in CBCI, is taking both the physical investments into physical infrastructure, which we call hazard mitigation, as well as the risk transfer mechanism in insurance or insurance-like products. So again, not necessarily in any particular order. These are pretty basic, but realize that it's much more dynamic than just a 1, 2, 3, 4, 5, right? But in general, you got to define the need, and to do this, you need, just like our overall view for this, it's a bespoke offering, right? There's no one size fits all approach for all communities. You got to sit down with the community members and define the need. You have to determine what authorities they have, right? Again, every state and local jurisdiction is going to have a different rubric here from which we would do that. You're going to engage the stakeholders. Again, a diverse group of stakeholders are going to need to provide input for this to be successful in any particular community. You need to analyze the risk, understand what exactly we're looking to transfer, and then finally, of course, transfer the risk either to a traditional carrier model or the alternative models that Andy mentioned.
So with that, we would certainly welcome any questions or comments. I understand these slides have been posted. We would enjoy further conversation with any of the legislators here in attendance. So please, by all means, either lob a question in here now if we have time, or otherwise reach out to us separately. Our contact information is included here. So really thank you for the time today and look forward to a dialogue on this.
Thank you both for the presentation. Do we have any legislators requesting recognition for a question or comment to our presenters? Seeing none, thanks again for your presentation, and thank you all for your attendance this morning at the meeting. Seeing no other business to come before the committee, I would entertain a motion to adjourn. Second. Thank you all.
All right, I have 10:30, and I know everybody's got places to go. Not as far as some. So we'll go ahead and call the meeting to order. I'll ask any of the legislators that are on Zoom to identify themselves.
Ken Cooley, California.
Kevin K.
Fisher, Kentucky.
Kevin K.
Oh, go ahead. Deborah Ferguson, Arkansas.
Paul Atke, Minnesota.
Edmund Jordan, Louisiana.
It's probably not in here, but in other stuff.
All right, anybody else on Zoom? If not, I'll ask the representatives that are in the room to identify themselves.
Jim Dunnigan, Utah.
Bob Hackett, Ohio.
Steve Westfall, West Virginia.
Carl Anderson, South Carolina.
Paul Whelan, Missouri.
Senator Matt Pitch, Arkansas.
Senator Jason Rayford, Arkansas.
Representative Brenda Carter, Michigan.
Senator Ronnie Cromer, South Carolina.
All right. Thank you, everybody who is attending. I need a motion to waive the quorum.
So moved.
Is there a second?
Second.
All in favor, say aye.
Aye.
I need a motion to adopt the minutes from our December meeting. Is there a motion?
So move.
Is there a second? All in favor, say aye.
Aye.
First item on our agenda is a update on future meetings. I'll turn it over to Tom for that report.
Thank you, Mr. Chairman, Mr. President, lots of things. So let's start with Boston, which is our next meeting. So we're set for Boston, but set isn't exactly on terra firma because the COVID rules in Massachusetts right now would not allow us to hold a meeting in Boston.
We don't know with the vaccine rolling out. So we've given them a date. We told them May 1st ideally, but certainly by May 15th. We also are waist deep in discussions with Newport, Rhode Island as a fallback. So that way, if anyone has already made their flight arrangements into Logan, that's drivable to Newport, Rhode Island. So that's why we did that. Of course, we're going to Scottsdale in the fall. A contract we've signed since our last time together is the 2023 spring meeting is going to be in San Diego at the Westin San Diego. One other future meeting thing of note is the NAIC took our traditional week in 2025, which our traditional week in the fall ends on the Saturday before Thanksgiving. Now, we had a meeting with them at the beginning of, I think Matt's first term, President Lehman's first term, where he said, we can't meet in December because too many people miss the pre-filing deadlines around their state. So for anyone booking that far in advance, we're going to meet the week prior to our typical week in November 2025, which are dates November 12th to the 15th that week. So that's all we have right now. We're continuing to look. And also based on that, we're going to book our annual 2026 and 2027 meetings in our traditional dates pretty soon, just so we can lock those down.
All right, thank you, Tom. Next item on our agenda is the administration. Tom, you want to give us a report on the meeting and our financials?
Sure. So between breakfast and now, breakfast the other day and now, we've had a couple more registrants. For a spring meeting, this is just really fantastic. We have 281 total registrants for this meeting, 145 people in person and 134 virtual. So we've now crossed the point where there are more people attending in person than on Zoom. We love our folks who attend on Zoom, but it's nice seeing a lot of people in the room and in the hotel. 51 legislators from 23 states. And the legislators, ladies and gentlemen, thank you, have even a higher propensity to be here in person, 39 in person and 12 virtual. We had a dozen first-time legislators, which is great. Additionally, the turnout from the NAIC was really high. 8 commissioners, 6 of them in person and 2 virtual, and representatives from 14 insurance departments. That high number of commissioners participating tells me that maybe members of the NAIC wish they would have some meetings in person as well. So that's the report on the meeting. Do I go back to you, or do you want me to just flow right through the financials?
Just go right into just go right into the financials. I'll just make a quick comment regarding, and I made this comment when we opened, is it was neat to see that we had 51 people, legislators from 23 states. And I can remember the time, and many of you here can remember when, if we had 14, 15 states, we were doing really good. To see 23 states participate is really a tribute to where I think NCOIL is heading. So with that, Tom, if you want to go into the financials.
Sure. And just one last addendum on that. Patty, I don't even know where he went, but that rock solid intern of ours just handed me this. So the turnout for this meeting, both in total of number of attendees and in legislators, is the highest since we've come aboard when we started using electronic registration. We don't have the numbers with us before that. So we started in January of 2016, and this is the highest attended meeting since then. The 2021 unaudited financials through March 31st show revenue of $368,600 and some pennies, and expenses so far of $242,700 for an excess of revenue over expenses of $125,900 heading into this meeting. The heading into this meeting part is important because the revenue from this meeting, the company that handles the registration sends the revenue all over at once. And obviously, we're going to be paying the hotel and the AV guys, guys in the unisex sense of the word. We'll be paying out a lot of bills. But so far, the year seems to be off to a rousing start. Invoices for dues have been sent out. Collection is very similar to where we were last year at this time. So we thank anyone who's already gotten your dues in. And frankly, we're optimistic that we're going to have a solid year of dues payments. The Budget Committee, chaired by Assemblyman Cahill and the officers, have instructed us to be a little bit less lenient with states who say, well, we didn't have that in the budget for the dues, because we had those conversations with officials around the country last year. So we may need to reach out to some of you to say, could you help us with the dues? Mr. President, unless there's any questions.
Are there any questions of Tom on either the meeting or the financials? Anybody virtually? All right, I'll just make a quick comment here too on our new due structures with the stipend program. I think we're seeing a lot of first-time people that are coming based on that. So I really think that was the right step to take, and I'm glad to see a lot of first-time people and others who are coming back not simply for the first time, but returning because of the programs like that. So the next item on our agenda is our consent calendar. This is where we take on any of the reports of resolutions and model laws that were adopted or readopted during our time here, as well as decisions that were made, activities or actions taken by the NCOIL officers between our meetings. The consent calendar are just the different meetings and the bills that were taken up. We now take that as one block calendar. If there are any committee members who would like an item removed from the consent calendar and discussed separately, let me know. And if not, we would entertain a motion to move the calendar as a block.
I move the consent calendar, Mr. President.
Is there a second?
Second.
All in favor, say aye.
Aye.
That takes us to our next item, which is other sessions. Tom, do you want to touch on these, or do you want me to touch on these?
Whatever your pleasure is usually.
We had some of our other sessions that were not revolving around the actual committee work. We heard from South Carolina Lieutenant Governor Pamela Yvette the other day. I thought she did a really good job, and it was very engaging. I caught her in the hall and talked to her for quite a bit. And so I was glad that she was here. We had, during our legislator luncheon, we heard from Robert Hartwig. Thank you, Robert, for your presentation of COVID-19 1 year later. We had two interesting, I think, very timely general sessions. We had a general session on the future of long-term care in light of the COVID-19, which I thought was very enlightening, as well as the Edmund chaired the mandatory police liability insurance and its impact on safety. And I think when that ended, it was a start to a conversation, because there was a lot of material there. We had our third meeting of the Special Committee on Race and Insurance Underwriting. Again, a personal thank you to Senator Breslin for continuing to chair that and doing a great job. And those were the other sessions. I also, it's always nice to note that we have these networking, quote, networking breaks, but I did see a lot of people in the hallways conversing. And what I thought was interesting is a lot of them were conversing with the regulators from different states. And so I think it was really good to see a lot of interaction from those here in attendance, as well as the regulators that were here. Tom, you want to add anything to that?
I do. I just, since the Lieutenant Governor had to move her speaking time out of lunch into the late morning, obviously a lot of folks who had responded that they'd be attending lunch decided to go out in Charleston and spend some money and have lunch around town, which is certainly everyone's right and opportunity. So that left a lot of lunches unaccounted for. And so we would really like to thank Representative Carl Anderson, who arranged to take all the lunches that weren't accounted for to take them to the Baker Family Donation Center. So none of that food went to waste and it went to folks who really needed it. So Carl, thank you so very much for that.
Thank you, Carl. That's fantastic. Thank you, Carl. Anything else on the other sessions or speakers? If not, we'll move on to any other business. We got a couple of items here. As is our practice or as is our bylaws, we do welcome new executive committee members. If you are a chair of your state's insurance committee, you're automatically an NCOIL executive committee member. If you are present at this meeting, I don't see Senators Carpenter, Senator Johnson, or Senator Michelle here, but I do see Senator Matt Pitch, who chairs the Insurance and Commerce Committee in Arkansas. And we would like to welcome you as a new member of the executive committee. So welcome to you, Senator Pitch. At this point, I'll turn it over to Senator Raypert as he wants to make a nomination.
Sure. Thank you, Mr. President. Members, one of the proudest traditions of NCOIL is bipartisanship. And I've made a new friend here during this meeting and talked with Will and staff about the possibility. She actually serves, and I'm speaking of, and I will go ahead and make my nomination. I would like to nominate her to the executive committee. State Representative Brenda Carter is the minority party vice chair in Michigan. She explained that the way they handle that is that the majority party will get the chairmanship and the minority party member will be the vice chairmanship. And very interesting, Representative Carter also was the first woman elected to represent House District 29 in Michigan, where she is at. She has a long legislative history before getting into the state legislature. And actually her husband is the city council pro tem, Randy Carter, who is actually here with her. And it's my honor. The only thing that I want to say I'm sorry for is that I don't have my suit and tie to make a nomination for a colleague like this. But I do want to make this nomination, and I will say it's a good place to make the statement for the record that one of the strongest features I think of NCOIL has been that most of the time you don't even know the party of the people that are at this meeting because it's so focused on the policy and the legislation, and I think that is a highlight. And as I was nominated to serve as an officer and way back when by a Democrat, it's my honor to nominate Democrat State Representative Brenda Carter and would ask that the committee allow her to take a position on the executive committee as well.
Thank you, Senator Raypert. We would take a second to that nomination. All in favor will say aye.
Aye.
Welcome, Representative Carter. And Senator Raypert was giving a lot of your accolades there for someone that of 25 years of age. You have done quite well in your political career to this point. Looking forward to your continued attendance. I know you've been here before. It's good to see you back and representing the great state of Michigan, my neighbor to the north. So with that, I want to move on to, I don't know, is Russ here? Russ Harper here still? Okay.
This is Teresa Casey. I'm on Zoom. I'm happy to speak to the IEC topic if I may.
Yes, go ahead, Teresa.
Thank you. We have a topic from Scott Zeich of SafeLight. This is really a consumer protection topic relating to some upward pressures on premiums resulting from safety features advancing in auto glass and other automobile safety elements. We've submitted this more in detail in writing to NCOIL, but we're finding kind of some bad behavior resulting from lack of understanding on the part of consumers about what really needs to happen with particular kinds of recalibrations and other aspects on what have traditionally been pretty simple repairs that have gotten more complicated. So the IEC thinks that the time is right for NCOIL to take a look and get some education on this subject. Thank you.
All right, thank you, Teresa, and we'll look into that issue. I appreciate you bringing that forward today. One last thing I have is if you were here on Friday morning, it was my honor to give to South Carolina Commissioner Ray Farmer our Regulatory Leadership Award. Ray has done a fantastic job leading the NAIC. Looking forward to continue to working with that organization as well as Ray. He's not going anywhere. He's just not the president anymore. Like I said, I think when we were going through some of those numbers, we always meet, the NCOIL officers meet with the NAIC officers when they're here. And I think it was the first time we sat in that room and we were outnumbered by regulators, which was really good to have a great conversation with them. Is there any other business to come before this committee or this NCOIL meeting in Charleston? Seeing none, I'd take a motion to adjourn. Is there a second? All in favor, say aye.
Aye.
All
Aye.
opposed? All right, I don't think anybody be opposed. We're ready to go home. Everybody have safe travels, and hopefully we will see you in Boston.